and good morning, everyone. Happy to be here today to go through some details here on single audits and compliance over federal awards. You guys are the first one seeing our brand new headshots. We last did headshots about 5 years ago, so I think the only difference is I look about 5 years older than I did in the previous headshot. So happy to be here again. I've been with the firm almost 20 years. Been 19 years since I graduated from Shippensburg and started here at SEK. I'm a member with the firm and work on approximately 60 local governments throughout the year. So just diving in a little bit on the next page. Again, a lot of times we get asked the question, what is a single audit? And what is it? How is it different than a regular audit? And I think that the best comparison that I could make, obviously everybody's, I think, used to having a routine audit or an annual audit. I'll compare that to going to the dentist on a regular basis. And a single audit, a little bit more involved. And unfortunately, I think the comparison might be is to having a root canal. Knock on wood, I've never had to have a root canal, but I hear it's more intrusive and a lot more involved related to that. So that single audit process, what it really does, I know the title can be a little bit misleading on what a single audit sounds like, one audit by itself, but essentially what it means is that we're looking at the federal awards that you may have. And going through the compliance requirements of those federal awards and making sure that the compliance is met. So that single audit reference, I'll go through the requirements of it, what it involves, what it entails, and then what the compliance component of that single audit is throughout the presentation here today. But again, that single audit is much more in depth than a regular audit. Again, it focuses primarily on compliance over federal awards. In addition, again, we are testing both compliance of those federal awards as well as testing internal controls over compliance. So a little bit different than a regular audit, where a financial statement audit focuses more on the number side of things, making sure that the financial statements are materially correct. The single audit does focus on the amounts expended, but primarily focuses on the compliance and the internal controls over compliance. So how do you know whether or not you need a single audit? Essentially, a single audit is required if an entity expends more than $750,000 of federal expenditures in any fiscal year. So that threshold, again, is based on the expenditures. I've gotten several calls from clients in the past where they call me up and they say, hey, we were awarded $1 million grant. We're going to need a single audit this year. And maybe that award didn't happen until right before the end of the fiscal year, and they didn't expend any of those funds. So because of that, that single audit wouldn't be required in that fiscal year, but would be once those funds are expended. The other example I'll give you, if you have an entity that only has one federal program, let's say it's a new federal program and it's $1 million, if that entity expends $500,000 in one fiscal year and $500,000 in the next fiscal year, that entity would not need a single audit at all, because in neither of those years did they expend more than $750,000. On the flip side, if that same $1 million grant is expended all in 1 year, then in that year, a single audit would be required. So because of that, it's the same grant. It just kind of depends on when the expenditures are incurred. I know the examples I just gave were for one program, but that threshold is for your total federal expenditures. So if you have multiple programs, let's say you have 3 different grants that are $300,000 that you spent during the fiscal year, then a single audit would be required. I do have a small caveat for the ARPA program. Obviously, the ARPA funding is being passed through to entities, whether it's from the federal government directly, or maybe it's coming through the state or the county. So those funds are typically federally funded for the ARPA program. And there is a separate program audit that may be done in lieu of a full single audit. So if you do have ARPA funding, you're nearing the single audit threshold, I would just recommend to communicate with your auditors as soon as possible for that, so that you can discuss whether single audit's needed, or maybe, again, the alternative program audit could be used. The other piece that I made reference here is to what's called the compliance supplement. That is issued annually by the OMB, the Office of Management and Budget. It's a very short read. The compliance supplement's only about 2,000 pages long in total. But in all seriousness, you don't have to read necessarily the full compliance supplement. But because of that, it does offer a lot of information. It provides general compliance requirements as well as program or agency specific requirements as well. So again, if you think you need a single audit, I would communicate with your auditor, determine which pieces of that compliance supplement would be best utilized for you to have a handle on and to be able to look through in advance of the single audit itself. So on the next slide are just some additional details. Again, how do you know what to generate in order to determine whether you need that single audit? And I think the first step is to accumulate the information to prepare what's called the Schedule of Expenditure of Federal Awards, or the CFA. Because we're accountants, we love acronyms. CFA is just another one that we utilize on a regular basis. And it basically summarizes all of the federal programs or federal grants on a concise format that ultimately will be included in the financial statements if a single audit is required. So each of the bullet points here are the requirements of the CFA. So each of these are required to be included, but you can see the high level information here to have the grant name. There is a separate notation that is required for any COVID-19 funding, just to have that designation right in front of the grant name for that. You also want to have your agencies, which the funds were received. So again, you could have a federal agency that you're receiving federal dollars from, or as I mentioned earlier, it could be passed through a state agency or maybe even a county, or potentially another local government or a nonprofit organization that's passing those federal funds to you. So you want to have both the federal agency as well as the local agency or the pass-through agency notated as well. Also, what's required if you're asking yourself, well, how do we know if a grant is federally funded or not? Typically, I would go back to the agency that's providing the funds or look through the agreement itself, because it should list what's called either an ALN, an assistance listing number, or that was previously called a CFDA number. So a catalog of federally domestic assistance for that. It's a 5-digit number there that notates that that is indeed federal funds. Other components that are required are the award amount, the cash received during the current year, again, the amount expended during the current year, because that's the ultimate driver of having that single audit, and then also a requirement or the amounts passed through to subrecipients. You may not have any amounts that were passed through to subrecipients, but that still is a requirement of the CFA to have a separate column. So we still include that on the far right-hand side typically, even if it's 0 amongst all the individual grants for the total amounts passed through to subrecipients. So on the next slide are just we're going to walk through a couple steps for determining compliance in a single audit. So in order to compile the information for the CFA that we just talked about, obviously there has to be some sort of tracking process in place at your individual organization to be able to track that information, to summarize it, to include it there on the CFA. So you want to have some sort of policy or procedure in place to determine the amount of revenues and expenses that are accounted for in each of those individual programs. Again, you don't just want to look at it in total, but ultimately that CFA, or the Schedule of Expenditure of Federal Awards, will require those to be broken down by program. So that's where it's key to have a tracking process for, again, both the revenues and the expenses by program that can be included there on the CFA. Obviously, if you have one federal program, it's fairly easy to track that. You don't have to have a robust system in place to be able to have that information to compile it. But obviously, it becomes much more complex if you have 5 to 7, 10, or 15 different federal grants to be able to compile that information. Again, this is kind of the first step on determining whether a single audit will be necessary. And obviously, having accurate financial reporting behind that is imperative to have this be correct CFA.
Hey, Kevin, there is a question in the chat. Is the CFA for just awards that meet the criteria of the single audit awards, or any awards?
Yeah, it's a great question. So the CFA is going to include any federal award in which amounts were either received or expended during the current year. So we'll talk about thresholds on what's tested as part of the single audit here in a little bit, but that Schedule of Expenditure of Federal Awards includes all federal expenditures or all federal awards, again, in either which amounts were received or expended during the current fiscal year. So the next step, again, is just going through and again, evaluating those expenditures by program. So again, that threshold for having a single audit is $750,000 in total federal expenditures. And that's going to be looking at those by program basis, again, not just in total. Specifically, when you ask, okay, which programs will be tested to start with, and I will go into more details here in a little bit, but each federal program that expends more than $750,000 in a fiscal year is considered what's called a major program and must be tested once out of every 3 years. So I always start with this. If you're having a single audit for the first time and you have one large grant, or maybe you have a couple different grants, but you have one large one that exceeds $750,000 in annual expenditures in one fiscal year, that program will be tested. Without a doubt, that'll be tested because it hasn't been tested in either of the 2 previous years if it's a new grant. So again, I'll walk through some additional details later for what programs will be tested on an annual basis, but just to have a general idea. The next step, I'm sorry, I'm going to answer the polling questions here, minimize that. So the next step is just to go over the understanding of internal control over compliance. So internal controls are imperative when it comes to the single audit. A single audit requires both testing of compliance and internal controls over compliance. So we'll talk about the compliance requirements here in a little bit, but again, it's imperative to have an overall understanding of what your internal controls are, both from a financial reporting standpoint and from the compliance side of things for the single audit. So the key thing here is to look through the grant agreement itself. Those go through the primary compliance requirements that'll be applicable and tested that are directed material. And there's also that compliance supplement that I made reference to earlier. It lists a lot. The compliance supplement includes a lot of federal programs and is kind of our program that's going to dictate how we test and which compliance requirements that we are testing. So they determine what's applicable, but that doesn't mean that they're necessarily directed material to your specific organization or to your specific grant that we will be testing. So that's the key point here is, again, to kind of document behind the scenes. 1, what are the key compliance requirements? And 2, what are your internal controls to ensure that that compliance is being met? And that just kind of flows right into the next step is to go through those compliance requirements to determine which ones are applicable. There are 12 potential compliance requirements. I've listed here the 6 most common compliance requirements, and we'll walk through 5 of these here in a little bit. But the first one that goes through is activities allowed or unallowable. Again, that's are you spending the money on what the grant is allowing you to, or maybe not allowing you to. The next piece is your cash management, and that kind of goes hand in hand with reporting. That's just looking at your spending of those funds if you're receiving the advance funding for the grant, or maybe it's a reimbursement basis. How are you reporting that information back? So again, cash management and reporting typically go hand in hand. Your period of performance looks at the time period in which you can expend the funds. So it's kind of looking at those allowable expenditures and are you incurring those during the appropriate period allowable under the grant. And then procurement, suspension, and debarment. If you have large construction projects or you're purchasing items within the federal programs, or are you procuring those and are you getting those from vendors that are not suspended or debarred? And again, we'll go through some more details here on these later. And then the last one could be applicable, but we don't see too often, but it relates to subrecipient monitoring. If you're taking federal dollars and you're passing it on to another organization and that compliance is flowing down to them, you still have a compliance requirement to ensure that the subrecipient is meeting the appropriate compliance requirements. So that just falls back to subrecipient monitoring. Again, sometimes it's labeled as applicable for federal grants, but if you're not passing those funds through to a subrecipient, then it wouldn't necessarily be considered direct and material. So a lot of times we get asked the question, what does additional funding mean to us? What impact will that have on us? Well, again, I think a lot of organizations may have a single audit for the first time, or maybe the first one in 15 years. If you think back, there was additional federal funding under the American Recovery Act or the ERA funding pushing 10 to 15 years ago. So some organizations may not have had a single audit since then. Some may be having it for the first time. So again, looking at what will be tested as part of that, again, typically the threshold is $750,000 unless your total federal expenditures exceed $25 million in a fiscal year. Most organizations that we audit are under that threshold, so that's why we talk about that $750,000 kind of being that cutoff for the program being tested once out of every 3 years. The other threshold below that is if you do have a program in which expenditures are between $187,500 but less than $750,000, there's an evaluation process that the auditors go through to determine what additional programs, if any, will be tested as part of that single audit. So ultimately, that's a process that's completed by your auditors to determine which major programs will be tested. But again, once that CFA is prepared, then that determination can be made. But it's not like you have to make that determination up front and go to your auditors and say, here are the programs to test. On the next page, it just talks about some high risk versus low risk auditee. There is a denotation if you do have a single audit that says the organization is a high-risk auditee or a low-risk auditee. And a lot of times we get asked the question, well, what's the distinction there between a low-risk auditee and a high-risk auditee? I will say the first step that we typically have and where this most commonly pops up is the first time an organization has a single audit, they cannot be considered a low-risk auditee. So it doesn't mean that you're at a high-risk organization. It's just from looking at it from a single audit perspective on a high risk if you haven't had a single audit performed in the previous 2 years. If you have had a single audit, then there are additional criteria that we have listed here. Essentially, you have to have a clean audit opinion, both on the independent auditor's report and what's called the yellow book or the report under the government auditing standards, that they did not have any material weaknesses that were identified. Also can't report that a substantial doubt for the ability to continue as a going concern, and couldn't have any findings in the 2 previous audits for any type A programs that were identified in the current year. So essentially not having any findings in the previous year and having those single audits will lead you to be a low risk auditee and not a high risk auditee. What impact does that have? On the next page are just some additional details where that goes through that. Essentially, as part of the single audit major program determination, if you are considered a high risk auditee, basically total of at least 40% of the total federal dollars must be tested. So if you have one program that can get you that 40% coverage, that's great. If not, if you are a high risk auditee, there may be more than one program to obtain the coverage. And again, the coverage is just looking at the programs that are tested divided by the total federal expenditures in the current fiscal year. If you do meet the criteria for a low risk auditee, we only required to obtain 20% coverage. So that's the difference there. Again, besides being disclosed in the financial statements, that's the true impact, is how much coverage is required as part of the single audit. So again, I know we've kind of touched on this preliminarily, but I know a lot of organizations ask, well, which program or programs will be tested in the current year? Again, I think the couple of steps to look at is to first prepare that preliminary CFA as soon as you can. Looking at any federal programs that exceed $750,000 in the current year, were they tested in the 2 previous years under the single audit? And if the answer to that is no, they will definitely be tested in the current year. And then if you have any others beyond that, again, I would suggest just working with your auditors. They can kind of go through that determination once the CFA is fully prepared. I know there's a lot of verbiage here. There's a question here at the top. It says, why are internal controls related to federal awards important? This is coming directly from the Code of Federal Regulations, or the CFR. And basically, the non-federal entity must establish internal controls over compliance. And that's what that's getting at here. And there's some additional details on the next slide as well. But it's really just implying and requiring that the organizations, the non-federal organizations, having those internal controls over compliance. And that's essentially ensuring the federal government that the funds will be spent appropriately. So again, I don't want to read through every slide. I did just pull that directly from the CFR for reference for you, so that way you can see what's required there as far as internal controls. So on the next page, it just talks about, again, the main difference between a financial statement audit and a single audit. Again, when it comes to internal controls, what's the key difference? As I'm sure many of you are used to with your financial statement audit, a lot of times we provide an internal control narrative. We ask for you to update that. Our only requirement as far as the internal controls is to ensure that the controls are designed appropriately and evaluate those. So we perform a walkthrough just to gain an understanding of those internal controls to make sure that they are appropriately documented. So that's our only conclusion, is that they are appropriately designed and implemented. Whereas a single audit, again, looking at the compliance, we ultimately have to get to what's considered a low assessed level of control risk. And the only way to get there is through testing of a key control, and basically a control testing over those compliance requirements. So our conclusion is that the control is effective. So what I really look at when looking at the controls here, a financial statement audit, again, only required to perform a walkthrough. So looking at one transaction, whereas the single audit, the testing of controls, that sample size could be anywhere between 2 transactions if it only occurs infrequently, or it could be up to 60. If it's a control that is occurring frequently, we have to test those controls to ultimately get to that low assessed level of control risk. So we're performing control risk, and that sample size could be up to 60 that we're looking at just over the compliance. Again, because our conclusion ultimately has to be that the control is operating effectively. On the next slide are just some additional details here of what, again, that low assessed level of control risk means. And again, there is professional and judgment involved in that. But I think the third bullet point is what's important, because ultimately we're trying to provide assurance to the federal agencies to let them know that the controls are adequate to ensure federal programs are meeting the compliance requirements associated with that. Essentially, those federal agencies are relying on the single audit to ensure that the compliance is being met. I will say if a control is deemed not to be effective, a finding will be reported as part of that. So again, that may be determined in either looking at the controls up front or through that control testing. So if there's not the appropriate sign-offs or approvals, there may be a finding that will be reported associated with that. So just want to explain the outcome associated with the testing of internal controls. On the next page, it just goes through some additional details here of what those compliance requirements are. So enlisted, this actually comes from the compliance supplement itself. Just took it from one of the programs that was listed. You can see here the 12 potential compliance requirements that are applicable. And you can see the yes or no below each of those. So this is telling you which ones of those compliance requirements are indeed applicable to that program. If a compliance requirement is not applicable, then it doesn't have to be tested as part of that, as denoted within the compliance supplement. However, on the flip side, just because something is notated as being applicable, it doesn't mean that it's direct and material to your organization. And again, the example I'll give is toward the right-hand side, again, that subrecipient monitoring. If you're not passing through funds to another organizations to a subrecipient, then even though it's applicable, it wouldn't be considered direct and material for that reason. So because of that, we wouldn't have to test it. So this is kind of the first step, again, looking at that grant agreement, looking at the compliance supplement, and determining which compliance requirements are applicable. Next, it just moves over to the internal controls over the federal awards. Again, and gaining an understanding as your auditors of those components of internal controls. We primarily focus on step number 3, because I feel like the other 4 steps, we already kind of have that understanding, and we're gaining that understanding as part of the regular audit that we're performing, as well as far as it's related to the control environment. Again, the risk assessment, in other words, what's management doing to determine it was necessary to ensure compliance? Again, how's the information being communicated and how's it being monitored after the fact? Instead, we primarily focus on the bold number 3, the control activities. And that's, again, how is the organization ensuring that compliance requirements are being met? And that's what we'll walk through, those compliance requirements in detail, just to provide some examples of what those key controls could look like. So what I did was walk through the common compliance requirements. Again, I tried to take the 5 most common that we had of those compliance requirements and which ones are typically most applicable, and just to provide a little bit of detail of what those compliance requirements mean and then how they'll be tested. So I always say steps A and B, activities allowed or unallowed, along with the allowable cost and cost principles, they really go hand in hand. And then a lot of times in the compliance supplement, they are combined. But these are different for each of the federal programs that you may have. And that makes total sense. For the activities allowed or unallowable for a federal program, a school district may have a federal program in which they're trying to assist students with reading, whereas a borough or a township may have a federal program to redo a highway or a street project. Well, because of that, the activities allowed for each of those federal programs are going to be totally different. And those are dictated by the grant agreements themselves and then ultimately substantiated within the compliance supplement itself. So that's why that's going to be unique, whether depending on which federal program you have and what's allowed or unallowable. And those details, again, are typically included either within the grant agreement itself or within the compliance supplement. And again, that just goes on further under step B for the allowable cost and the cost principles. Again, it's making sure that what is being performed and what's being applied is reasonable for the performance of the federal award. I do always like to point out there is no double dipping allowed with any expenditures applied to any federal program. So if you have an expenditure that you're completely applying to one federal program, you can't take those same costs and apply it for reimbursement from another federal program. So that can only be applied once, and the same whether it's being applied to federal or another funding source. If you have other state monies or monies from another organization, again, there is no double dipping. And the key there is to appropriately document which expenditures you're applying for and then verifying again that they are not being applied to another program. The next compliance supplement, compliance requirement that we have is typically your cash management. And what this is really focusing on is to try to minimize, again, the time between the receipt of the federal funds and the actual incurrence of those expenditures and paying out of those funds. This is really applicable if advanced funding is received up front. So not every grant works that way, but if you do have a grant in which advanced funding is received, it's just trying to minimize the time between when you receive those funds and when those expenditures are incurred. So if your federal program is on a reimbursement basis, then this is not applicable because on a reimbursement basis, you're expending it up front and then getting reimbursed after the fact. But if you are receiving those advanced funding, again, cash management does come into play. Moving down to the next one that's most common is your period of performance. Again, it's just verifying that the expenditures are incurred or during the appropriate period. And that appropriate period can vary again from grant to grant. You may have a grant that only has a year to spend those funds. On the flip side, again, I mentioned a highway project earlier. Sometimes those projects you could have 3 to 5 years because it takes planning involved in that and then incurring the expenditures to actually do the highway project. So because of that, that could be a far extended time period in which those funds could be expended. You want to make sure you have an understanding of what that period of performance is to ensure that the costs incurred are during the period allowed. The next compliance requirement, I'll say, is where we most commonly run into issues, unfortunately, when it comes to single audits. And most commonly, this is where items may pop up that may be unaware of to the clients previously. And I'll say there's two different pieces of this. There's procurement and then there's suspension and debarment. They're all kind of combined here together, but they are separate requirements that are included here in this overall compliance requirement. So procurement, basically under the Code of Federal Regulations, required to have a set of standards that follow the Code of Federal Regulations to ensure that you're meeting that process. And this just goes down to there are certain thresholds on which quotes must be provided, or maybe you must go out to bid for those. So we'll go through those details on the next slide for the details of the procurement. Also, I'm sorry, Christina, just if we can go back one more step. Under the suspension and debarment, under the second bullet point, governmental entities are prohibited from entering into organizations or vendors that are suspended or debarred. So there's 3 ways to meet that. There's a website, sam.gov, to verify that those organizations are not suspended or debarred. You could also collect a certification from the entity or add a clause or condition to the agreement of the covered transaction. But the key here is, again, to have written policies and procedures for both procurement and suspension and debarment. On the next slide, this is the procurement requirements. And you can see, I apologize, a little bit hard to read here, but there are different thresholds for when you must obtain additional quotes. And those are called small purchases less than $250,000. If you exceed $250,000, again, typically your construction projects or fixed prices or cost reimbursements, that's where you get into the sealed bids or competitive proposals. But you could also have federal programs in which they are deemed sole source, and there's not multiple ways for you to obtain those quotes, but you must document that process if you do deem what you're purchasing or, again, the services provided being sole source. The key here is documentation for that. So again, those thresholds, you just want to make sure that you're meeting those because those thresholds are different than the state requirements under the Code of Federal Regulations. So the last compliance requirement that I have is just reporting. Again, the most common types that we have, obviously financial reporting. A lot of times within organizations, you're required to file quarterly reports just to show what those funds have been spent on. You just want to make sure that you have supporting documentation behind the scenes to substantiate the amounts that are being reported in those quarterly reports. Typically, you also have either performance or special reporting. They may want updates on how the project is going or how the federal award is occurring. So those details sometimes are included there within that reporting as well. But again, you just want to make sure that those are submitted timely. A lot of times it's 30 days after a quarter, but those are typically laid out within the grant agreement itself or within the compliance supplemental, which reports are due when and what elements are required to be included within those reporting requirements. So just a couple of best practices to touch on briefly. Again, I think the first step is just to understand what are all of the appropriate grant requirements and include everybody that's involved. For some of you small organizations, I realize there may only be 1 or 2 people involved with a federal grant. However, there are other agencies where there could be 5 to 10 people involved in a federal program. So you just want to make sure that all of those are included in understanding what those grant requirements are to ensure, again, that the compliance requirements are being met. Also, you want to review and make sure that all your policies and procedures are updated. Again, certain requirements of the compliance requirements are to have written policies and procedures. You just want to make sure you have an understanding of that. And then also just documenting the internal controls over compliance. Again, if a compliance requirement and internal control is not documented, it's considered a deviation. And the most common example I have there is the suspended or debarred listing. You may go out to the website and verify that the vendor is not suspended or debarred. But what we recommend is to print that out and initial it to verify who performed that. Because if we come in and we ask as part of the single audit to verify that, if you didn't print anything out or didn't document that, unfortunately, if it's not documented, we have to live under the assumption that that procedure was not completed and it must be reported as a deviation. So documentation is obviously of utmost importance. Also, as within any internal controls, again, just the importance of segregation of duties. The more individuals you can have involved in that process, the better. And again, just having the appropriate approvals behind those, whether it's cash disbursements, whether it's purchase orders, again, timesheets, other department heads, is the payroll department approving those, making sure that you have the appropriate approvals for those and for every expenditure that's incurred and applied to any federal grant, making sure that the appropriate approval is obtained. On the next page, it just talks about internal controls being tested. Again, as part of it, if you've been through a single audit, you know, again, it is more involved. And I mentioned sample sizes could be upwards of 60 sometimes for some of those transactions. But what we perform as part of that, if we're looking, there could be multiple compliance requirements that are tested at the same time. An example that I've given here that works for that is payroll controls for allowability. Obviously looking at that individual payroll, but there also may be matching requirements. So sometimes you have to only apply half of the federal expenditures for that for a payroll. So we can test both the allowability and the matching for that to ensure that only half of it was applied to the federal program. On the flip side, what's not an example is a disbursement for allowability and also procurement. Obviously looking at whether an expenditure was allowed to be incurred and whether procurement occurred, two totally different controls associated with that. So just to be aware of that and how that testing will be performed as part of that single audit. Again, a little bit different as far as that disbursement process could be. Next, just moving over to it. Again, as I mentioned earlier, a lot of times we perform what's called dual purpose testing, where we are testing internal controls over compliance and compliance at the same time. And once again, the bottom, I made reference to this already, but just to have it in writing, those sample sizes obviously could be significantly different depending on how frequently they occur. So if we're looking at quarterly reports, that population size may be 4, and we may be testing 2 of those. On the flip side, if there's invoices and there's over 300 invoices applied, we'll be testing somewhere between 25 and 60 of those transactions. So just to give you an idea, again, of the involvement and what's included there in the single audit testing. So just to wrap it up briefly, just a couple of key takeaways here. When it comes to a single audit, again, compliance will be tested. Compliance is the key piece of that, and looking at the federal awards and looking at the internal controls over that. Again, you may not be used to internal controls being tested, but if you do have a single audit, testing of controls will be performed and not just the processes associated with that. And again, in a financial statement audit, controls are not required to be tested, but in a single audit, they will be. The last bullet point here on this slide is just because a compliance requirement is met, it doesn't necessarily mean that the control is operating effectively. And when I say that, an organization may have a transaction that's looking at suspended or debarred, the organization may not have been, but if the control wasn't in place to verify that internally, again, we would have to report on that as a deviation. So that's what the first bullet point alluded to there. Again, if there is non-compliance that is met or that was identified by not identified by the auditee, typically that leads to both a compliance finding and an internal control over compliance finding if the compliance requirement was not met. So the key point we have here, again, the last 2 takeaways: review all your federal agreements and try to understand what the applicable compliance requirements are, and in making sure that you have the appropriate internal controls behind the scenes. And as always, when it comes down to it, we always like to say our phones are always on. We are happy to discuss these at any point in time with you and discuss them with you in advance. If you know you're going to have a single audit for the first time, the more that you can communicate that up front, the more your auditors can point you in the direction to have you have the help in place so that you can meet all the appropriate compliance requirements once the single audit starts. I know that was a lot of information, especially first thing in the morning here to start with single audits and federal awards.